A very good evening to you all, friends. I'm Sanjeev Singhal, Central Council member and Chairman, Auditing and Assurance Standard Board, Vice Chairman, Committee for Member in Industry and Business. I welcome you all to the 119th program of AASB for this council year. Friends, I and my Vice Chairman extend a very warm welcome to all the speakers, moderator, and all the participants. Today, the topic is audit of IT sector. And friends, we know that IT sector has played a pivotal role in the growth of Indian economy. Companies like Infosys, TCS, Wipro, and so many other companies have done India a lot of proud. And so many of chartered accountants, are contributing to the growth of these companies in the IT sector. And IT sector in our IT sector is the best in the world. There are certain peculiarities in the audit of an IT sector. For example, the services are delivered online, and at the same time, it's sometimes the question comes whether it's an export of services, posing a GST issue, and at the same time, how the revenue is to be recognized, whether the revenue is to be recognized at a point of time or over a period of time. There are many peculiarities. The audit trail, how that audit trail is being maintained. So, in our series of the specialized sector audit, today we'll be talking about the key consideration in the audit of IT sector. To deliberate on this subject, we have two very esteemed speakers, CA Sanchit Gupta and CA Achal Jain. Both have vast experience. And at the same time, we have two moderators, CA Gulshan Grover and CA Maninder Kaur. Gulshan has been our speaker also. Today he is acting as a moderator, and he has promised that next time he'll be a speaker. So I'm looking forward to his deliberation as a speaker. And I'm thankful to all the participants who are taking keen interest, due to which we are continuously organizing these programs. And friends, if you want to be a moderator or a speaker in any of our future programs, do let us know. We'll certainly evaluate your profile. With this, I once again thank to all the speakers, moderator, and the participants, and the Deputy Secretary of this committee, Anil Lalji, for continuously organizing these programs. May I now invite the moderators to kindly take over and take the session forward. Gulshan and Maninder.
Gulshan ji.
Yeah, thank you, Chairman sir, for your kind and words. I think you precisely summarized the importance of IT sector. So even today we talk about role of IT in audit. So audit is not, if I can say in Hindi, audit bhi IT se achuta nahi hai. So without IT we cannot survive today. Everything is IT dependent in one way or the other. So I'll not take much of time. I think we invite Achal Jain and Sanchit. Achal, I've known for a long time. We worked together for some time in EY. And I'll give a brief about Achal's experience, and then Maninder can take over. So Achal has almost 17, 18 years of experience, has worked with Big Fours and on all kind of gaps. I don't think he has left any gap behind. Indian gap, US gap, IFRS.
There should not be any gap in the gaps.
Yeah, there is no gap in the gaps. So I think he has worked in all type of gaps, including US gap, which we find lesser experts in India, lesser number of experts. So he has worked in that also. Has almost 17, 18 years of experience in auditing different kind of industries, and with focus on IT industry. I think it will be interesting to hear his perspective on audit of IT industry. Maninder, maybe you can talk about Sanchit's experience.
Yeah, thank you, Gulshan. First, I'm extremely grateful to Dr. Sanjeev Singhal and P. Vishal Doshi for giving me this opportunity of being a part of this seminar as a moderator. And I am thrilled to introduce CA Sanchit Gupta, which is our distinguished speaker today. Sanchit has over 15 years of expertise in internal controls and audits for US tech listed and private clients. He is a master in offshoring and business strategies. His knack for implementing cutting edge financial technologies has revolutionized efficiency in the field. And at EY, he's shown as the global account leader for major e-commerce audits. Now, as a director at Baker Tilly Parag in India, Sanchit spearheads the innovative business models and policies and talent management as well. Um, his outstanding contributions have earned him numerous awards like Emerging Entrepreneur and Transformer Awards. Yeah, so I'm very glad to have Sanjay and Atul over here. So I would like now Sanjit to start the deliberation.
Thank you. I would like to thanks Sanjeev sir and thank you both Gulshan ji and Maninder for the brief introduction. And thank you for all the members who are participating and taken their time to hear this session. So we both me and Achal ji will be spending a couple of hours with all of you. So we'll get started without taking much time. So I'll present my screen. Can someone confirm once they're able to see the screen?
Yes, sir. Visible.
Okay, perfect. So today what we are going to do is we are going to spend some time with you to go through the key audit considerations for the IT sector. And we'll understand this sector to a certain extent. It's a pretty broad sector. So there are different subsectors under that as well. So we'll go through that. So the flow of the session will be, we'll spend some time in understanding the importance of this sector. As Sanjeev ji mentioned that this sector has significant contribution for our economy and technology is evolving every day. And with its evolution, the sector is growing by length and breadth. We can see a lot of companies coming up. We'll spend some time on that. And then subsectors will also go through some part of it, what called, so for example, fintech, edtech, all falls under IT sector. Broadly, they may be called as IT or technology, but they definitely have various subsectors. And from audit standpoint, we need to spend some different considerations. We may not be able to spend too much time into each of the subsector, but definitely the kind of uh, presentation that you will see, you will get some understanding about how different each subsectors are. And then we'll move on to the audit aspects and some other challenges that auditors face and some practical scenarios. So if you see here, significance of the IT sector is known to all of us. We have seen giants like TCS, Infosys, Wipro, and newer ones like Persistent Solutions and other so many companies we can talk about. They're definitely contributing to the economy in terms of growth. Services sector has a significant portion in the overall GDP growth. And IT sector companies are contributing significantly in that. There are different ways to look at it, but it is pretty high. And India has dominance due to its talent pool availability. We see a lot of engineering grads who help in working in these companies achieving those strategic priorities, which in turn helps in the economic contribution and also generate the employment for the young talent pool of our country. This sector has no boundaries. If you see, technology can be served across the world, across the globe, and which ends up having work in deal in transactions in foreign exchange, right? So there are a lot of export of services as well, which is happening from India via developed software or maintaining and support services and various other revenue recognition practices that revenue models the companies have. So this sector certainly has significant economic contribution. So it becomes very important as an auditor to understand how this sector is currently performing, how it is shaping up, since this sector is changing very frequently with a lot of technological innovation and transformation that is happening. And if you see, India is is now becoming the innovation center of the world. So many innovation lab centers for various big companies like Dell, Microsoft, they are basing out in India, which is certainly definitely contributing to the economy. However, it is also providing uh, significant opportunities for the businesses, for people, and even as auditors to us to get them as clients and support them in finding on their financial statements and controls. And we see this digital transformation happening with lot of efforts of different companies. Classic example is what Zoho Corporation has done, and other companies in fintech, be it Paytm or in education, an academy, Udemy, and even like Byju's for whatever reasons. It's in different news, but we can see they definitely have contributed to that. And India definitely has global competitive advantage and competitiveness in terms of lower cost and high talent, high availability of talent pool, which helps in contributing to whatever the sector is going through right now. And not just does it at a macro level, but at even in, if you can see it in societies, it is impacting in transformation, helping people look for those opportunities, pick up those skill sets, and upskill themselves to be part of this journey and part of this inclusive growth. Not just corporates, not individuals, but if you see the government is focusing a lot on this sector, and you all have heard about Digital India, Startup India, and all is basis because of the strength what India as a country has, and what we have done in Aadhaar, and now recently ONDC is a classic example for all those initiatives, and that is all based on technology, and it is creating that ecosystem wherein these companies are coming up and getting opportunities to grow and serve just the domestic market, but also the international market. It is certainly bringing a lot of investment for R&D or for infrastructure by way of AIs and other type of investments. So we see a lot of financial benefits in terms of overall growth from that perspective as well. And then recently we have heard a lot on the sustainable development with respect to ESG goals for environment, social, and governance, because COP28 has mandated certain requirements. So there are definitely technological support and advancement happening, be it in carbon credit tracking and calculation and all that. So businesses are certainly coming up in those fields as well. That this sector, due to its nature, is changing a lot. So technological advancements is happening. I don't know how many of you have heard about artificial intelligence for Alexa Assistant or Google Assistant or companies like that. So that we all have seen and heard and living that for now almost for last 5-6 years, and we don't know where this is going to head towards to. There's always a talk on blockchain, on artificial intelligence. So we see that technological advancement happening, and it is not just to observe it, but participate in that. And from auditor's perspective, it becomes important to understand these businesses differently because they are not traditional businesses and doesn't require a traditional way of auditing. And at times we have to think differently to understand and come up with our approach to audit them. Then in terms of data transformation, if you see, we were in a pre-internet era, then internet era, then a cloud computing started, and now artificial intelligence on cloud is happening. So if we see a lot of different businesses which has appeared in last few years are like Amazon Web Services or Google Cloud Platforms or Microsoft Azure. So the transformation is happening, which is enabling businesses to also work in a different format. Then we all heard about and experienced the impact of the pandemic, which COVID-19 brought in, and it led to all of us to work from home for some time, and that changed how the businesses work. A lot of technology companies really, um, uh, in one way, benefited in that part because they learned how to operate remotely. And a lot of technological solutions, for example, GitLab, they were able to completely work from home because the SaaS solutions and different type of technology that they're using in to collaborate, to communicate, is enabling them. But whatever is happening, it is eventually leading to increase the size of the sector. Now, e-commerce, a lot of Amazon shopping, and at times we don't even have to visit a market, right? And certainly these type of companies are also has appeared in last few years. And then sustainability, I spoke a little bit, but if you see, even companies like Dell, they are spending a significant amount of their time and efforts into this. For instance, they brought in a package solution wherein they are reducing the waste that comes up uh, to package solutions to the customers. So they are they're working towards a sustainability. So the entire business has to be thought from the scratch to come up with such solutions which are technologically advanced and help to switch the ecosystem and help in bringing the sustainability growth through technology. An emerging business, if you have seen that how Geo has done, Reliance primarily was in different businesses. To quote this example, Geo is now venturing into different platforms, Geo Digital, and now what they're doing with Geo Mart. This is because of what is expected out of businesses at whatever size and scale they are in. They are all getting attracted to this technology and building solutions on that. Uh, One thing I want to really specify more here is all is good. However, the concern is always there. And as auditors, it becomes important for us how what we are doing for that is data privacy. There's a lot of talk about how much personal data is secure because you share your phone number, your email ID, and other lot of other details, some financial information also. So, and India fortunately came up with the Data Protection Act as well. Past, you have definitely heard about Facebook, now Meta, about the breaches that they were captured for in the US court for the data breach for the personal account from the personal accounts. So it is important that while we are auditing, we also focus a lot around that because that can actually impact the continuity of the business with significant breaches. So the user consent in sharing the data or to what extent the data can be collected, processed is very important that we need to factor in. What controls are there around data protection to safeguard the personal data by way of either encryption or decryption and how the access of controls are given. And then while the system is developed, what kind of privacy is integrated within the same. And if in case there is some data breach happening, what kind of notification is coming up. So all this we need to factor in, but we need to be very much part of this, the sector undergoing through. Okay. So moving on, here I want to specify that it's broadly it is IT sector, but if uh, we see here that this sector has various subsectors, subdivisions under that. We all have heard about software development, wherein application development, web portals, mobile app, any embedded solutions there. For example, Intel and Texas Instruments, and then we have a gaming apps as well, and then cloud computing, which can take form of different nature, infrastructure as a service, wherein you're providing the infrastructure for the companies to use, and then so Microsoft Azure, and then we have a platform as a service, wherein you provide a platform for other developers to build, deploy, and manage their applications, developing the or getting the infrastructure, developing the infrastructure as a whole, and then software as a service. we have all heard about Microsoft Office 365. We all use it. So that is nothing but a SaaS solution. And similarly, there are so many other solutions out there. For example, Dropbox and etc. Companies are also resorting to public cloud, and public cloud are actually similar to what Amazon Web Service and Google Cloud platforms are. At times, due to privacy, they also want to have their dedicated private cloud for their entire organization. And in this, we have various companies, for example, IBM Cloud Private. What is important is we need to understand that they all can be different type of companies, and they all can have different nitty-gritties that from auditor standpoint we need to understand and perform our audits around that. A lot of IoT devices use, be it Fitbit, etc., and smart home solutions, industrial solutions, healthcare solutions, in order to make sure how remotely we can connect with a patient, can serve them. Is also other solutions, other subsectors, and then other subsectors which we are already commonly aware are hardware, networking. It's definitely picking up after what India is trying to do to build semiconductors within India. Definitely health and fintech as a whole, they are already part of this overall umbrella. Now moving on, now coming specific on the audit aspect. So it is very important to understand the sector and then focus our understanding and understand the client further. So understanding the laws and regulation, the taxation part, the data protection laws, intellectual property laws, any specific regulations around compliance that a client has to adhere to, and then understanding the internal controls, like for ICFR reporting, for internal controls over financial reporting, how best we understand the ITGCs, because these technology companies, their sole premise is on the data, and data is on a system, and if it is on a system, ITGCs and application controls become very important, because you can't just focus on manual prevent detect type of controls, but you have to really focus a lot on ITDM, IT dependent manual controls, plus you have to focus a lot on application controls. If in case at times you may have to engage IT auditor for that is to make sure they are able to do the justice to the audit, so that whatever possible financial reporting impact has to come can be avoided by the right teaming. Risk assessment is certainly a focus. IT companies, like any other companies, but they're more prone to cybersecurity. Apart from other financial aspects, which remain pretty much common among different sectors, different other sectors, needs to be assessed very much into the detail, and then audit approach needs to be planned. As any other audit, but whatever we will do, like understanding the laws, regulation, controls, risk assessment, well, in addition to that, we need to specifically spend some time in understanding the system of the company, and making sure how the entries are flowing in the system, what different types of system and interfaces they are using, and then in reality we need to plan what kind of key accounts that we need to focus more versus others. And we'll talk on a few of those accounts on a broader scale in subsequent slides. And then audit testing for the effectiveness of IT and non-IT controls. You may end up seeing far more IT controls versus any other sector, because as I mentioned, their sole premise is on the technology, and then performing data validation procedures to make sure whatever your clients are providing you in terms of evidences, by way of electronic audit evidences that we say, you understand them, understand how they're generated, how they can be manipulated, and then accordingly plan our procedures around that. So to make sure that transaction processing is accurate. And then data integrity issues. access management is governed, how encryption, backup, recovery procedures are planned, and compliance of various other data protection and rights needs to be factored into. Then companies require to undergo ISO 9001, 27001 for their information security. They're complying with those IT regulations to mitigate any legal and operational risks is very important. Cyber security risk, this is very important because this can actually impact the sole existence of some of the IT companies at times because of if they are prone or they get any cyber threat or malware, phishing attacks, unauthorized access to the sensitive data for the customer or their other business relationships, it can impact their contracts and can impact their sole existence. So we need to engage our IT auditors to make sure we immediately responding to such risks while performing the audit. Then revenue recognition and contract compliance. The sector has very different complexities in the revenue models. The different contractual arrangements are there, which are complex in nature. Different type of revenue recognition. Auditors are reviewing those contracts, understanding the recognition policies and related procedures and disclosures as per Ind AS 115 as well needs to be factored into, and we'll talk a little bit more in the subsequent slides. And then different type of technologies our clients can start adopting, whether they resort to blockchain, AI, or cloud computing, which can impact financial and operating controls. We need to make sure whether we need to revisit such change in business practices to make sure that we are the same. Okay, so moving on, I'll spend some time on the most important part while we do the testing, or rather the planning of the audit, is how we determine the materiality, because the size of the audits cannot to audit everything, and we need to be very specific and filter the right reality is important, as we all know that it helps us in focusing on statements which can be omitted or misstated and impact the users for their decision making. Important to accurately determine that and rely it in our audit, both qualitative and quantitatively. So as auditors, we can pick different approaches. There are different measurement bases. Either we can resort to an activity based for revenue or operating expenses. We can also pick up earning based, for example, EBITDA, profit. Or we can also take an asset based at times, be it asset basis or likewise. So the idea is, suppose we take revenue as a base. Judgment is always allowed. I have seen in a lot of different firms that percent of the total revenue or 5% of the pre-tax income is what is used to start as a planning materiality, and then followed by calculating the testing thresholds or any error rate thresholds that needs to be posted for in case of deviation. So we have to see what's the company size, what's the complexity, what are the industry specific risks, and it is not going to be too objective, but it is very important to factor into all those things. And additionally, we have to also factor in any regulatory requirements, stakeholders' expectations, and industry specific risks, and so have to see what we have seen in other companies at times. Benchmarking other expectations from similar set of companies in the sector can help us measurement basis plus the materiality threshold. First few something on what impacts the financial statement user. So certainly it can be what the top line is in terms of revenue, what's the bottom line is in terms of profits. But to be more specific, different IT companies can have a different way determining their KPIs. So at times it can help us to see what are they really focusing on in their day-to-day business operations. So it can be annual revenue, recurring revenue. So what they are predicting as a revenue on an annual basis from the subscriptions, or it can be an order book, what they expect to come as a new business within a specified period. Or it can, we also have to at times see how companies are looking at their remaining length of period in terms of time for their impact on the overall revenue number for the current year. And then operating margin, contribution margin is definitely kind of profitability the company is expecting. And then customer retention rates. If there is a lot of turnover in the customer base, it is important to see how changes in customers are changing over a period that can impact the revenue stability for the company. And then also at times company can see what is an average revenue per user in case they want to predict how to monetize the efficiency within the customer base. If they talk in and around this, it can help us actually to determine whether we should pick revenue, whether we should pick profit. So this is the reason that I spent some time on the KPIs, and these are not all of the KPIs. These are some indicated KPIs, and there can be plenty of the other KPIs as well. Okay. Moving on, the internal controls in the IT sector. Of the controls, if you see on the slide, be it financial controls, IT general, IT governance controls, change management, disaster recovery, and compliance, they exist across sectors. There's hardly any difference, but we'll talk a lot about financial controls are important to make sure there is accuracy. Can rely on what is presented in terms of their consistency and accuracy. Cybersecurity will talk a little bit on how multi-factor authentication has been implemented to manage the access, to restrict the access to sensitive data, how they prevent that for unauthorized interception of access. And ITGCs are important to company has the IT steering committee to govern structure they want to put together or they have, and how they are having an oversight over that, and what's their strategy, what investments they are bringing in, what type of risk management practices they are following, what kind of review procedures they have over those policies and procedures, and compliance of them with industry standards is what be more about. And change management controls in terms of how controls have been put in place to manage and track IT changes in IT system or application, that due to the dynamic type of businesses, at times systems needs to be configured differently with what they have been in past, and during the year there can be multiple changes. We need to understand what kind of changes has been there, how it impacts financial statements, whether we need to get them re-audited in case the application control which was already tested pre-change. So we have to get another instance to get it audited again after the change to make sure it doesn't in any manner our audit procedure and approach. So, and then disaster recovery and continuity plans. If in case there is a server shutdown or IT outage of any manner which can interrupt or disrupt the business operations, it helps for us from auditor standpoint. We should understand what kind of a plan company has, to make sure they have a comprehensive disaster recovery plan for backup of the data, system recovery, or resuming the critical business operations, regular testing, so that it doesn't impact their overall functioning and their business commitments as well. That can impact their existence as an organization. And then compliance and regulatory controls. It is important to make sure regulations and industry standards and regular audits of those are done. It's complying to even GDPR type of compliances. The rules around it have put in place and got them audited as and when it is required. Okay, so moving on, I will want to spend some time on cybersecurity controls that falls under the overall controls framework. Network security to make sure that systems are protected against unauthorized access, and it can this here if you see it is not what company needs to do, but it can be a potential client which are providing these services to also to other companies. So for example, Cisco is providing services. So the clients can also have that kind of businesses under the broader umbrella of IT sector. So we can also look at from that perspective. But at least from the auditor standpoint, if we are auditing a company, we need to make sure if there are cybersecurity risks, these controls are put in place around the same. Then data security is important to make sure there's no breach of confidentiality, no integrity issues of the data, and security to make sure any attacks for in terms of any phishing attack or any hacking of the website that can be avoided. And identity and access management, factor authentication type of controls to make sure no one can actually enter into the system. Only the person who did the right and access can only get into the same. And then security operations center, it is important that how they are monitoring and responding to the security incidents in real time threats. So that, and if they can have a specific team or outsource it, but there has to be a continuous monitoring in and around that. Yeah. Moving on to specific financial statement accounts. If I talk broadly about the different revenue and expense accounts, so revenue, we can see software sales, wherein the company is generating revenue from selling the software licenses to customers, or subscription services, either providing a SaaS solution, which is giving them a recurring revenue. Consulting services, if our clients have been engaged to provide consulting, implementation, or integration services to the clients. At times, there can be PCS, post-contract sales contracts or services like maintenance and support services for software products, or cloud services, as we spoke about, IaaS, infrastructure as a service, or and then at times there can be custom development revenue coming from that, wherein they are developing software specifically for the needs of their clients. And hardware sale, for example, selling any servers, networking equipment, major sources of the IT company's financial statements. And then in expenses, most of it is pretty much similar. Either you will see COGS, depreciation, employee benefits, sales, marketing, GA, internet expenses. However, there you can see most likely see research and development expenses, wherein either the developing a new software or innovating a new solution and spending some time. So the capitalization issues into appropriately if it has met the capitalization criteria or not, and accordingly needs to be audited. Data center and infrastructure cost is another one where you can see since data need to be stored and expenses related to the same for hosting that data, maintaining it, and providing the network infrastructure. is highly critical, and you will mostly see in technologies coming expenses related to the same. I want to spend some time around revenue recognition models. So if you see on the slide, there can be different ways how the model can be, companies can charge their customers. One can be time based, where the pattern of the time will decide what revenue they need to get. This is more commonly in a SaaS type of solution, for example, Amazon Prime, wherein you recognize the revenue over a period of the subscription, and then it can be a milestone. Whether once you achieve a project milestone, a specific deliverable, then you are able to recognize the revenue. Which is mostly there in the software development cases. Once you have achieved one portion of the software development, which is being decided as a key milestone, and then you can recognize it. Usage basis revenue can be there, wherein you earn revenue for pay per use basis. Once you pay, then you can once you use each instance, and then you can pay for it. So the usage-based revenue can be there, which offers flexibility to customers certainly and aligns with the company's revenue targets. Upfront revenue can also be seen if you see there is an agreement, software licenses sold with perpetual usage rights. And once that has been agreed and decided, revenue can be recognized immediately. And then at times it can be a mix of everything, right? A few things. That is called as hybrid revenue model, wherein you don't focus just on time-based but or usage, but a mix of both. And then software leasing basis, wherein customers are granted the right to use a software for a specific period, which is similar to like a SaaS, right? So that is another model that we can see. Moving on to the substantive procedures specific. So on this one, I have covered few of the main ones. If you see, revenue recognition is certainly the one. Ind AS 115, modeling and recognizing the revenue. It is important for us to understand the contracts or the entity has got into with customers, how they're understanding those key terms, how they're correlating with the Ind AS 115, understanding the MSAs, SOWs, identifying the type of revenue model that the company is going to get through that from that contract. Is it going to be per user? It's going to be a time-bound contract or multi-year contract. Also, reviewing the software license agreements is important here. Delivery is going to be assessed, how acceptance criteria is going to assess, what are the licensing terms, when the revenue can be recognized versus not. Subscription revenue, be it in terms of reconciling with the active subscribers or users, along with the revenue recognized period that are going to be there. And then there can be multiple element arrangements by way of performance obligations, and then determining the transaction price, allocating the transaction price, because these contracts in the IT sector are sometimes very complex and they can have multiple element arrangements, software as a service as a different, and then PCS, post-contract service as a different performance obligation, and then needs to be assessed the total transaction value and then allocated among those performance obligation. Is important to allocate the revenue appropriately. And then if the billing model is time and usage, the procedure needs to be performed, how the correctness and completeness has been ensured. Because in time and usage, in TNM billing, it is important that the base data in terms of time and material efforts have been recorded and billed to the customer is appropriate, and there are no reconciliation issues between them. Intangible assets, of these assets, what the companies develop in terms of digital assets, they are of intangible nature, and reviewing when to capitalize the internally developed software is important, and then we are valuing and impairing any intellectual property assets, be it patents, copyrights, or trademarks that we have either acquired by way of acquisition of a different business within IT sector, or we have internally generated and recorded, and how we are going to calculate their impairment is important. And even the amortization model, how we are determining the life of that intangible asset, what considerations are we factoring into for technological obsolescence, and then factoring those both qualitative quantitative factors in coming up with the appropriate amortization model and method. Then expenses, as I mentioned briefly earlier, research and development expenditures is a significant expenditure in case the IT sector is heavily focused on developing new solutions, and how we are able to focus on capitalization in terms of whether to capitalize or expense of as per the standards is important, to make sure whatever expenses are recorded are reasonable, of reasonable nature, and how properly we are able to classify any expenses for leases in terms of disclosures also as per India's 116. Then software capitalization and development costs, very similar to what we had earlier, but the criteria for capitalization will remain. Hearing them is important. In cybersecurity expenditures, we are doing, and I heard a lot about data security and spending time on ITGCs, having the network security, data security, incident response testing, incident response systems, and all. But it is important that the company are investing adequately into the same, and we may see a lot of expenditures on that to have security systems around the software, hardware, and also training their own people at times to adhere to those controls to avoid any cyber threat. And then all the expenses related to encryption, access control, and incident response plans, we may definitely see and need to audit the same. And then at times we need to make sure that the coverage in terms of insurance for any possible attack, and how we are mitigating the financial risk associated with the data breach or cyber attacks is also going to be very important. And taxation, since we see that IT companies can have presence across globe, either the parent or subsidiary situated in India or overseas, and there can be cross-border transactions which needs attention, and we need to engage our transfer pricing experts or other tax specialists at times as well to assess the same. IT Act from time to time keeps on providing benefits in terms of tax holiday period if the IT services are provided from the free trade zone, that needs to also be factored into. And then company can also certainly have patent litigation issues or various other issues, be it tax litigation issues, and making sure that the legal confirmations or understanding the case and scenario, what kind of provisioning or contingencies needs to be booked, also needs to be factored into. I'll focus risks related to IT sector specifically, and commonly there are three common ones which I want to focus today more on are goodwill, and then IT assets, and then going concern issues. These are the three ones. Because of the dynamism of this industry, we definitely can see other financial risks also, but I've tried to put together the major ones for today's session. So if we see goodwill, we all know that it can be internally generated or acquired in its when we purchase, we have a purchase price over the fair value, we need to recognize the goodwill. So it needs to be assessed annually, and any change in the market conditions can impact valuation for goodwill. And similarly, IT assets, if our carrying value exceeds the recoverable amount. So that is how we generate. But the nature of the asset, maybe it can be software license, operating systems, and other digital assets under the IT umbrella. What can be the triggers is important to understand. So there can be different triggers that can impact the impairment. Definitely the significant downturn in the technology sector, in case the company was predicting the revenue to flow in for next 3 years. For some reason, it has been pushed forward. In that case, the discounted cash flow or whatever value the company was expecting may not be able to achieve, and it can impact the capital market decline can impact reassessing the impairment, and then shift in the demand or preferences for customers. If companies were expecting to develop a solution which may have some of customers, for example, 1,000 customers, but now they are the demands and preferences are changing. They will still have customers, but not what they predicted earlier. So they can lose that market share as in terms of changing customer preferences. So all this can actually impact the cash flows and the working for the goodwill or even the IT assets, and that can impact the impairment. Technological obsolescence, since we know that this industry changes frequently, so rapid changes in the technology can impact existing services, and it can become outdated, obsolete, and that can actually impact future economic benefits and triggering the impairment. Out of key contracts or customers, if in case we have major customers and due to either their downside or for some reason our relationship did not work out, the client of those customers, and that can impact the overall revenue flows for the company for future. And as it more happens, then any regulatory changes that brings in high compliance costs, and which can make our solution development not feasible, that can also impact our cash flows. And any technologies coming up, and that overrides with what we have been trying to achieve from past in our development, and any uncertainty, be it any war situation, any economic crisis or pandemic, that can play differently in terms of interest rates, inflation, currency, and that can impact the impairment. Management changes, any operational efficiencies there can be different other internal issues that due to which it can also be impacted. And then underperformance of our acquired businesses. Technology companies have the tendency to either acquire another company because of technological synergy. We can see at times the decision can be wrong as well, and due to which they are not either able to integrate those technologies within their portfolio or their product line, and that can lead to impact of the business and the impairment. And moving on, I want to focus on this going concern issue. As you see, every 12 months we need to assess the same if in case company's ability to generate operations to meet the financial obligations are not expected to be met. So good going concern, client has to certainly do their assessment, but as auditor, we need to understand what can actually impact the going concern, because there's so much dynamism in the sector. For example, if seen with the OTT platforms coming in, the DVD businesses or the companies and those have just vanished. They did not do anything wrong, but if you see that shift in the technology has caused them the entire business, right? So we need to see how our clients are responding to such technological advancements, whether they are catching up with the same, or if not, the for their business continuity. So because of competition with new entrants coming in, and they will. So that needs to be assessed and seen whether it is going to impact the going concern. So and then any product launch delays, any rising software development cost can also impact their overall profitability and their cash flows.
Apologies, sir. The noise disturbance is coming from your side. Voice is not clear.
You can't hear me? Can you hear me?
Double voice is coming. Gulshanji, you are also facing same problem?
No,
Maninder
I'm
madam?
not seeing.
No, sir. I'm not facing any
No,
such
I think
problem.
Anilji, it's fine. We are not
Okay,
facing
okay.
any double voicing.
Okay. Kindly, sir, kindly continue, sir. Kindly.
Okay, no worries. That's fine. Okay. So financial performance challenges I was talking about. Yes, the company has high debt levels and that can impact their liquidity as well. That needs to be seen if they will have a continuity of the funding expected, and if not, that can certainly impact their going concern. Any technological disruption that can come up, as I mentioned earlier, of them not innovating or catching up with the emerging technologies can impact their revenue growth because the existing product line, which is getting more on a traditional line, may dissolve after a certain period. And if it is not going to be replenished with the new technology in the product line, it can have a significant impact on the continuity of the business. And then any legal or regulatory issues, there's always a risk of having a penalization about regulatory fines or penalties that a company can get, even loss of any big legal battle that can cost them heavily, can impact their continuity. There's some operational risk. Then, in case the loss of a key customer, any operational disruption due to cybersecurity breach, change of management, or disruption in the supply chain, or delay in critical components can impact the continuity. Lack of innovation, any management turnover, I spoke about that earlier. And then economic factors also, like economic dynamism, like different challenges in the economy in terms of downturns, currency fluctuations. If a contract has been determined basis a more aggressive approach in terms of, for example, INR versus USD. However, that was not favorable, the contract going forward, then it can certainly impact the overall profitability. And at times, going concern, but it needs to be assessed properly. And then capital structuring and financing due to lack of funds availability to continue spending efforts in the development projects. Liquidity issues. If we see that this sector has a long sales cycles and any enterprise solution may require to have at least 6 months, 12 months, at times more as well, because the complexity of the product, the customization that at times customers require can lead to eventually providing them at their doorstep and start recognizing the revenue. And then upfront cost that the company still has to bear. So the customer is not going to pay until they have at times the product at in-house. But till that time, investing in that technology either through R&D or paying to the skilled developers or acquire the infrastructure, it requires a lot of market research expenses, etc. And till the time that product is saleable and revenue recognition can happen, he needs to keep on bearing that cost and can impact the liquidity for the issue, impacting the going concern as well at times. Seasonality of the business. At times, what solution that you are developing may not be going to have acceptance throughout the year. It can have a seasonal So in the off-peak months, you can see a sales decline, and that can also impact. So whether that has been factored into for the portion of the period, or whether it has been acted planned for the entire year, needs to be seen. And then dependence on project-based revenue, there will be certainly delays at times for delivering the project, cancellation of the projects, and it can certainly impact the regular cash flows. That can impact company to maintain their liquidity and cover their operational costs as well, and that can impact the liquidity. Rapid technological changes, as I mentioned earlier, it can impact in case of inadequate returns. Now get, because what they planned earlier versus what they see the expectations from by the customers can impact what revenue they are going to recognize. So there's certainly high pressure from competition and pricing pressures to maintain it. So the profits get thinner, margins start reducing, and it can impact the liquidity issues. Then cost overruns, at times there can be whatever is budgeted to be spent to develop the project versus what the company is spending is significantly higher, can certainly impact. And then any debt obligations in terms of what the company is expected to raise, what they have raised versus what they are able to service in terms of paying their interest burden and paying off the debt, get impacted due to the changing dynamics of the economy, can impact. At times, company is very much concentrated to various customers or contracts. For example, 70-80% or 90%, or at times 100% of the revenue concentration is from one customer. If something goes wrong with that customer, can impact the overall revenue recognition and overall business of the client. And then global economic conditions, certainly there can be different other challenges coming out from either recession or other scenario, which can lead to declining sales and delayed payments, and impact the overall liquidity issues of the company. So these are some issues, financial risks and triggers that as an auditor we need to make sure that we understand and appropriately respond while you are designing our audit procedures and meaning on the truth and fairness of the financial statements and controls. So this is what I wanted to cover. I want to hand over to HLG for the rest of the session, and we can take the questions towards the end.
Thank you, Sanchitji. I think you have nicely brought out almost every aspect in relation to this IT sector. And I think we have so far understood that this IT sector is quite peculiar in nature, quite different in terms of how the other sectors will operate. And that's why the audit procedures, or I would say the audit approach, which is required to be considered in respect of IT sector, could be significantly different as compared to any other sector, which we are now going to focus more on. Though there could be some bit of overlap in terms of what we have discussed, but our idea will be now to get into some of the significant issues which we face in terms of the IT sector particularly, and how should the auditor really respond in terms of dealing with those issues. Yeah, so I'll just quickly share the presentation once again. All right, so talking about some of the areas which auditor needs to focus on, or which are quite commonly seen in case of IT sector particularly. One will definitely be the revenue recognition. It's like a very important area, and in respect of revenue recognition, there are few challenges which come in respect of IT sector because of the complexity of the contracts which they enter into. Now, unlike any other sector, in case of IT sector, if we have to talk about the customer contracts, so it's not going to be a 1-pager or 2-pager contract. So generally they will be running in 2 pages. Okay, so as an auditor, Now, what becomes important is to go through this complete contract. Why? Because if the contract is such a detailed one, then of course its detailed evaluation is required, and that is only possible once we go through this complete contract. And in respect of all the revenue contracts, you'll find the similar sort of feature, which you won't really find in case of most of the other sectors. Huh? So you will not be finding those one-pager POs or one-pager contracts. The other aspect around the revenue recognition which arises in respect of IT sector happens to be around some of the steps which are required to be evaluated in terms of revenue recognition. Now, if we look at Ind AS 115, which is the standard which deals with the accounting requirements now, there are few steps which become all the more important in respect of IT sector. One is identification of performance obligations. Now, in case of IT sector, generally the contract will require various performance obligations. So a single customer may be looking for various services, or you can say it's a blended contract which covers various aspects in terms of what is required to be delivered to the customer. And that is where identification of the distinct performance obligations, which this Ind AS 115 requires, becomes extremely important. Okay, and that is where significant level of judgment and I would say complexity also arises. Why? Because once again, to identify all of these performance obligations and then to segregate them in terms of as to what is distinct and what is not distinct becomes very critical, because that is going to have an impact on the revenue recognition of the company. And that too in respect of the contracts, which are quite detailed and which are quite complex in terms of the structuring under which they are documented. The other aspect around the revenue recognition, which becomes important because of this performance obligations or because of the multiple performance obligations which are present in the contract, happens to be the allocation of the transaction price. Now, once again, in case of revenue contracts, you will find that even though the contract contains various performance obligations, but a blended contract price has been agreed with the customer. Okay, so we can say that as against 4 or 5 performance obligations which are appearing in the contract, the price is 1. So maybe there is a revenue contract which is for say 5 crore and which covers various performance obligations. Now, in this case, the one point that we discussed becomes important is about the identification of distinct performance obligations. Now, once that is done, the next step, which becomes all the more important, is to then allocate the revenue in respect of all of those distinct performance obligations. Now, this again happens to be quite challenging. So when you deal practically with some of these contracts, go through some of these terms and go through some of the revenue arrangements which are really entered into, this becomes quite complex. Okay. Then the third aspect, and again a very, very important aspect, and which is, I would say, is found in case of almost every IT company, happens to be the final step, and that is about revenue recognition. That is whether you recognize revenue over time or at a point in time. Now, if this revenue recognition is required to be based on, one can say, completed contract method, then it may still become relatively easier in terms of approaching the revenue recognition. But when it comes to the application of percentage of completion method, okay, wherein we applied revenue recognition over time could be based on the time passage, or it could be based on the various methods which are prescribed by the accounting standard, which could be in the form of input method or output method. Now, once again, that is required to be again evaluated. This exercise in itself is very challenging. Okay, and this really bothers the auditors quite a lot, bothers in terms of, once again, understanding the contract. And then, of course, this requires significant involvement from the auditor's side in terms of the time that they are required to spend on, and also the senior time which is required to be spent on the engagement, because something from the audit side, which will require the senior members of the audit team to spend more time on, will definitely be complex in nature. Okay, wherein you can just not really pass on this area particularly to the junior members of the audit team. Why? Because revenue in itself is a critical area, or you can say a significant risk area. It also happens to be the presumed fraud risk area. So that's why these three areas in particular are quite critical when it comes to any IT company. Now let's try to understand some of the finer aspects as around some of these concerns, or you can say sort of concerns which may arise in case of IT companies. Now, if we talk about a revenue contract in case of an IT company, it will generally be involving various performance obligations. For example, if I have to just keep it very, very simple for the purposes of our discussion, any contract would generally involve delivering the software to the customer. Okay, generally, the contract would require wherein the license of the software is passed on to the customer. Okay, as a first step. Now, the other step could be in terms of customization of that software, or you can say implementation of that software. Yeah, or you can say the installation of that software at the customer's location, or you can say in respect of the customer. Third could be in relation to the post implementation support. Now, once these two things are completed, generally you will find that these contracts are not something wherein you'll just deliver and you'll just move out. No. So these are generally running over a period of time. Okay, and when we say a period of time, this could be 2 years, 3 years, or 5 years. So generally these are long-term contracts wherein this post-implementation support is found as a part of the arrangement with the customer. So now this is going to be the third aspect, you can say, or you can say the third performance obligation in respect of the same contract which is entered with the customer. And fourth could be in relation to the upgrades. Okay, so over a period of time, so if you are really working on a software for a company or for a customer, wherein you are also engaged with that customer maybe for say next 3 years or 5 years, and we have understood so far through the discussion with Sanchit ji that things are quite dynamic and now technology is changing rapidly. So every now and then you come to see that some of the changes have come in, some of the upgrades have come in. So all of these again become a sort of obligation on the part of the IT company to pass on to the customer. So which again is going to form part of that contract. So broadly, we can say that if there are 4 elements present in the single contract. Now, as far as the management is concerned, so they have been dealing with these types of contracts day in, day out. So they would definitely be doing on the accounting aspects in terms of their evaluation as to how this is going to be recognized. They would have also done their accounting. But as far as the audit is concerned, irrespective of what the management has done, auditor will also need to review this. Auditor will also need to analyze this. And this is only possible by going through that contract, or you can say by analyzing, by studying that contract in detail. Yeah. And there are not going to be maybe 1 or 2 contracts. So you will have various contracts. Okay. You can have various contracts throughout the year. If we talk about some of the companies which are large, or even if we talk about some of the medium-sized companies, therein you'll see a lot of contracts. So that in itself makes this exercise on the part of the auditor quite complicated, or you can say which also involves a significant time in terms of the effort which is required to be spent. And therein we need to understand the evaluation of which performance obligation is distinct and which is not. Why? Because this will have a bearing on the revenue recognition, because this can significantly impact the top line of the company. So one can easily understand that the top line of the company is going to get impacted. So how significant area this is going to become. Yeah. The second aspect, as we discussed, and which falls in line directly, or you can say which is directly linked to this aspect, happens to be the allocation of the transaction price. Now, if we say that the contract is for 5 crore, which involves 4 performance obligations, but for each performance obligation, the amount is not defined as to what amount corresponds to which performance obligation, or even if that is defined, we need to go and evaluate the requirements of Ind AS 115, which requires one to find out as to what should be the fair valuation of each performance obligation. Okay, and accordingly, that transaction price needs to be allocated to each performance obligation. So this exercise in itself requires a separate evaluation over and above what has been done in respect of identification of the distinct performance obligations. And once that is done, that is only when the revenue can be measured. Otherwise, it will be like very difficult for the auditor to ascertain as to what is going to be the amount of revenue which can be recognized. Okay, so in terms of measurement, this step in itself becomes very, very important. Yeah, and that is where again a lot of challenges are involved. Why? Because a significant judgment is involved, and this is again not an area for which we can just simply go and refer to a checklist. Some sort of evaluation is required. Auditor needs to also have a mindset as to how the industry is operating, how the customer contracts have been behaving, and what is the fair valuation in respect of standalone prices in respect of all of these performance obligations. Yeah. So some of these steps therefore become extremely important on the part of the auditor, without which revenue recognition is going to get significantly impacted. Third, and as we discussed, which happens to be extremely important and extremely challenging area in respect of revenue recognition, is about its recognition when percentage completion method is required to be involved. Now let's try to understand as to why this becomes challenging. See, if we talk about percentage completion method, okay, wherein we'll recognize revenue based on some method. So let's suppose cost method is picked up for the purposes of revenue recognition, which is practically followed by, I would say, almost every company, and most commonly used method as far as this particular application is concerned. Now, if we apply cost method, so cost one is going to be an estimate. Okay, so if we, let's suppose, talk about a 3-year contract. In respect of this 3-year contract, on day one, the management will be required to estimate the cost for the next 3 years to be incurred in respect of this project. Okay, which is going to be an estimate. And the moment we say an estimate is now involved, so what will happen? Another auditing standard gets triggered. Okay, which in itself is a big exercise, or you can say a critical exercise, because estimate is not something which can be evaluated with 100% accuracy. That involves approximations. There are a lot of assumptions which are required to be involved, and which the management would have considered, and which are then required to be looked at and reviewed by the audit. Now, basis this estimated cost, percentage completion will be derived, and basis which revenue will be recognized. Now, let's try to understand the challenges which may arise in respect of this particular exercise. Now, if the management wants to manipulate the revenue, so what can they do? Very simply, they can just manipulate this estimated cost. Yes or no? Yeah. Because if they manipulate this estimated cost, so what will happen? The percentage completion will change, and automatically the revenue recognition will get impacted. So if they want to inflate revenue, they can do this. And if they want to just cut down on the revenue, again, depending on the numbers which they want to present, which happens to be there in respect of some of the companies, then this is again possible. So that's why this exercise in particular becomes extremely important. And you would have seen that if we talk about today's scenario in respect of any audit that we perform, audit of estimates is a very important exercise. Tomorrow, when the auditor becomes subject to reviews, so I'm not talking really about the audit of the company. So I'm just talking about the reviews of the auditors. Okay, so let's suppose auditor becomes subject to review, wherein his files are going to be picked up, as you can see, various regulators have come in who are looking at the working papers, audit files of the auditors. So this area in particular is of extreme importance. A lot of focus is required on this particular area. So one area which is important for the auditor in terms of the review of his files, we can say, will automatically become extremely important as far as the audit of company is concerned. Yeah. So audit of estimate, because this is involved, so that's why this exercise in itself is extremely important on the part of the auditor. Now, this is one. Second aspect is when it comes to the percentage completion, there again, auditor needs to determine that in respect of the contract, before this percentage completion is applied, what should be the right approach for the purposes of revenue recognition? Means whether the revenue should be recognized at a point in time wherein the auditor is required, wherein the management is required to follow completed contract method, or should this be recognized based on the percentage completion? So now this exercise can once again be performed by the auditor only when the terms and conditions which are there in the contract are thoroughly understood. Okay, these are properly evaluated by the management, and therefore this area once again becomes extremely important on the part. And one can easily understand that all of these things that we have been discussing in respect of revenue particularly is not something over which junior team members of the audit can be involved, or they can just get into this exercise. So this is an area over which definitely senior members of the audit team will have to work on because of the complexity which is involved in this entire exercise. Otherwise, the chances are going to be that this significant risk area may get impacted, and therefore the audit quality may get impacted, and which is going to again have an impact on the opinion of the auditor. So that's why this area, I would say, becomes extremely important as far as the audit exercise is concerned. Now, we'll also be looking at some of the companies in India, some of the large companies in terms of their audits which have gone through, because now we all understand that auditors are also required to report in their audit report about the key audit matters. Okay, and key audit matters broadly covers as to some of the challenging areas in respect of the audit, which is not really in the nature of qualification, but at least the challenges which the auditors have faced during the course of their audit is explained over there. And what all procedures auditor would have considered in respect of dealing with those challenges. And one thing that we observe while we go through some of those camps, okay, which we are also going to discuss today, that some of these areas which we have discussed in respect of revenue recognition are common. Means if you pick up any IT company, large, medium size, or even if a small IT company you pick up, this area is something which has been picked up by almost every auditor, or you can say in respect of almost every company, you will find this to be a matter of camp. So that's why, once again, what do we find? That this is an extremely important area, and therefore a significant effort is required to be spent on this. So now let's talk about some of the audit procedures which the auditor needs to apply on this. Now, what could be the audit procedure? See, IT company in itself works in such an environment wherein we can't just simply apply some of those manual audit procedures or some of those audit procedures which can be easily considered in respect of non-IT companies. Why? Because they work on a very strong IT environment because of the nature of the business which they have, and because we are talking about IT company who are providing IT services to various customers. So that's why one should also understand that their internal IT environment should definitely be quite robust. And considering that understanding and considering the nature of business and considering the complexity which is involved, the first step on the part of the auditor, which becomes extremely important, happens to be the understanding of the entity, understanding of the industry, and of course, understanding of the processes in respect of various areas which are audited. And in respect of that activity in particular, understanding of the IT environment of the company becomes extremely important, because if that is not understood, then the auditor will not be able to do much about it. And that is where, once again, I would say another auditing standard gets triggered, and that is about involvement of an audit expert, which is going to be in the form of IT specialists, or you can say an IT team, which is required to be involved by the auditor. Okay, now, as we understand that these IT specialists could be in-house, or these could be those who the auditor may involve from maybe outside the firm or outside the organization, which is okay, but their role in particular in respect of any IT company is extremely important. Yeah, because without that, to get on to some of these understanding of the IT environment, to get on to some of the audit procedures, which could be in relation to the revenue or maybe about any other areas also, could be extremely challenging. And that's why that is one area which every auditor needs to focus on, and which is generally considered to be ignored by most of the auditors. So that's why I would say that that is something which needs to be focused upon by each and every auditor when it comes to the audit of an IT company. Now, through this, once the internal control, or you can say the IT environment or the control environment of the entity is understood, so this control environment, as to whether this is strong, robust or not, having an understanding of this, and to get a comfort over this complete control environment of the company, again becomes very important on the part of the auditor. Because if the auditor becomes comfortable around the controls as around that particular organization, as to whether those controls are operating effectively or not, okay, wherein the auditor can just simply go and take this control reliance approach and thereby cut down on some of the audit procedures, is extremely important. So if that is not done, then I would say the exercise of the auditor as far as the substantive audit procedures is concerned is going to be extremely challenging, or that will increase significantly. So that's why the first and foremost requirement on the part of the auditor will be, of course, to understand the control environment and, of course, audit this control environment and try to get into a situation wherein this, sort of control is something over which the auditor is going to get comfortable on. If that is not done, then as we discussed, that each and area is going to be significantly impacted as far as the audit procedures and the extent of audit testing is concerned. Now, this is one. The second aspect, as around some of these areas in respect of revenue recognition, I would say are going to be similar, which you'll consider for any other company. So that will be about selecting some of the samples. Of course, if it's about an IT company, so if they are having a lot of contracts, of course, auditor cannot just go and evaluate each and every contract. But if the auditor will have an understanding of various types of contracts which are there in the company and structurings which are there, he can just, apply this sample selection and pick up maybe in terms of coverage, each type of complex contract, which is then evaluated, properly understood by the auditor in terms of the terms and conditions which are involved, in terms of evaluation of performance obligations is concerned, and in terms of evaluation of the overall revenue recognition is concerned. The next aspect about the audit of this particular area will again be that audit of estimates. Now, when it comes to the audit of estimates, as we discussed, that estimated cost is a very, very important area in respect of audit of IT companies. And in respect of audit of estimates, so these estimated costs in terms of their built up and how these estimated costs have been changing year on year or period on period becomes extremely important. So auditor needs to carefully evaluate that in terms of how the estimates have been behaving against the actual numbers, because period on period, when the auditor is getting the actual numbers, whether there are significant variations as against the estimates which the management is making, or the variations are not so significant, that is again is required to be looked at by the auditor. When the estimates are prepared, management will definitely have budgets. So that is again required to be looked at. And another very important area which gets linked to this estimated cost aspect happens to be around the onerous contracts. Yeah, so we all understand that in case the project is taken up, but at the beginning of the project or at any point of time, even if the revenue is not recognized or the revenue is going to be recognized, say over a period of 3 years or 5 years, if the cost of the project, or you can say the total cost of the project, exceeds the total contract revenue over the project, then that cost which will exceed the revenue, or you can say kind of loss which will arise on that revenue, that is something which is required to be recognized upfront. And this is again one area which is required to be carefully evaluated by the auditor, because if at all this arises, which is quite possible in respect of some of the IT companies that we see, then this number could be quite significant. So even if we talk about maybe 1 or 2 contracts, because these contracts are long-term contracts, they are of significant amount. So it's unlike any other company wherein you'll just keep receiving POs on a daily basis. So it's all about entering into a large contract of a large significant amount. So therein this amount of loss in respect of that project could be quite significant. Yeah, so that is again one of the very, very important area, and which can again have a huge bearing as far as the numbers of the financial statements are concerned. So this again is very important to be looked at by the auditor, and that's why there again the understanding of the processes, understanding of the contracts or the types of the contracts becomes extremely important on the part of auditor. The another important area which generally arises in respect of IT companies could be in relation to the software development. So we all understand that these IT companies are into the development of software, and when it comes to the software development, so some of the requirements in relation to Ind AS 38, which talks about internally generated intangible assets, are required to be looked at as to whether these software development costs should really meet the criteria of being an intangible asset or not. Because if you look at IT companies, so they generally will have a separate department which is about R&D. Okay, and this department will be incurring huge costs year on year. Generally, we have a thought process that if there is a significant cost, then something should be done to avoid taking that to P&L, or how can we just simply take such a significant amount to the P&L, which is not appropriate. Why? Because the standard requires that if in case there is a research and development project which is going on and we are into the research phase, okay, wherein the required criteria for capitalization of that particular asset has not been met as per Ind AS 38, then that is required to be expensed off. So now this again is a very challenging exercise. So though we may go through the accounting standard, we may go through some of the audit procedures, but practically when you face some of these situations, to draw the line as to when the research phase will end or when the development will start, and when you get into the evaluation of the software development cost, in terms of what cost should be considered for capitalization, what cost should not be considered for capitalization, this in itself happens to be quite challenging. So that's why a careful evaluation of various costs which are involved becomes important. And there again, I would say the first step will be again to understand the process appropriately, because if the process is not understood, then just by following some of the sample testing or just by applying some of the substantive audit procedures, auditor may not be able to get into this right audit procedure. So that's why with the thorough understanding of the type of contracts or type of the arrangements or type of the transactions which the company has been entering into, these areas can be properly reviewed by the auditor. Then there are few more areas which you can find in case of IT companies, but they are again, I wouldn't say very peculiar to it, but you'll find in case of IT companies. That could be in respect of some of the SPVs which they may create, okay, which needs to be evaluated from the perspective of consolidation. or because this application of Ind AS 115 in particular in respect of revenue recognition, or you can say software development cost in respect of intangible assets which are internally generated. Yeah, because some of these contracts are involved, because some of these things are quite complex, significant judgment is required. Management needs to appropriately disclose all of these items in the financial statements. If these are not disclosed appropriately, then these are going to have a huge impact. Yeah, because as we understand that financial statements is not only about recognition and measurement, which is a common thought process, because generally as an auditor, we get happy if we are able to recognize and measure something. Okay, generally, if we look at these two areas, which is about presentation and disclosures, this is not given adequate importance. But you will find companies wherein just because some of the important disclosures have been missed out, there have been modifications. And that is what the auditing standard also require the auditor to do. So that's why, even though we are talking about disclosures here, but some of these disclosures could be quite significant, which can have a huge impact as far as the truth and fairness of the financial statements is concerned. And that's why one should not really ignore some of these requirements, particularly in respect of the audit of the IT companies. Yeah. So this is, I would say, broadly about some of the key areas which we find in respect of IT companies. What I'll now do is I'll just take you to quickly some of the matters which have been reported by some of the large companies in terms of their audit as a scam, and thereby we'll just try to evaluate, as to what is it that has been bothering the auditors, or what is it which the auditors have been finding most challenging in terms of their audit in respect of some of those companies. So I'll just share some of those annual reports. Just give me a minute. I'll just move on to the annual report of some of those companies, which you can look at. All right, so if we look at the annual report of TCS for 23-24, so the matter which has been reported in CAM, okay, so this matter is about revenue recognition. So if you look at it, it talks about revenue recognition. So let me just read this. So it says the company inter alia engages in fixed price contracts wherein revenue is recognized using percentage completion method as per the input method based on company's estimate of contract costs. And we identified revenue recognition wherein percentage of completion is used as a key audit matter. Why? Let's try to understand why. So they are saying, so auditor is saying there is an inherent risk and a presumed fraud risk around the accuracy and existence. Okay, and that is because of the customized and complex nature of the contracts, like we discussed, and the significant inputs of the IT system. Yeah, so this is very, very important for you to understand. Then they are saying application of revenue recognition accounting standard is complex. Ind AS 115 is complex, and it involves key judgments, estimates in mainly identifying performance obligations, related transaction price, estimating future cost to complete these contracts. Okay, then it says these contracts may also involve onerous obligations which require critical assessment of foreseeable losses to be made by the company. And then they are saying at the year end, if part of the revenue is not recognized, which is in the form of unbilled revenue, which is called as contract assets, then that is also required to be looked at. So they are saying, in respect of this company, that these are the challenges because of which they have found this matter to be a matter of CAM, which is important for the users. Now let's try to understand as to how they have dealt this matter. So what all procedures they have performed. So they are saying their procedures included obtaining an understanding of the system. So can you see this? Just by obtaining an understanding of the system, processes, controls for recording and computing revenue, what can happen? Auditor can get on to the right approach in terms of applying the procedures, which is generally ignored. which is generally ignored. So, but you can see that the first audit procedure which they have specified is all about understanding. Then they are saying involvement of our IT specialists. So because they understand that this is one area wherein audit team may not be competent. So that's why competent people need to be engaged. Okay, so they need to involve experts. Who are going to be the experts? IT specialists. Yeah, so that they can assess the IT environment in which the business systems operate and tested system controls over computation of revenue. Tested IT controls over appropriateness of cost. Tested controls pertaining to allocation of resources. Then tested on a random sampling basis the controls relating to estimates. Okay, then it says on selected specific and statistical samples. So they are saying that samples have not been picked up like on an ad hoc basis. So they have applied strategic statistical technique. Okay, they may have used audit tools for this sample selection or otherwise, but sample selection has been very carefully done. So that is what they are trying to highlight here. So they are saying we tested the revenue recognition wherein they evaluated identification of performance obligation and the transaction price. Then they are saying for testing the company's computation of estimates of contract costs, we assessed estimates of cost to complete. Okay, they were reviewed and it was also find out whether those were approved by the properly authorized persons or not. Then they are saying performed retrospective analysis of costs incurred with estimate cost to identify significant variations. Again, a very, very important exercise. Then they are saying assess the appropriateness of work in progress in respect of the contract assets. And they are saying inspected underlying documents. So how do they inspect? By going through the contracts. Performed analytics means analytical procedures have also been performed. So variance analysis, all of those procedures they have performed. Yeah. And thereby they have been able to get the comfort over this area. Now let's quickly flip through some of the CAM areas which have been reported by some other companies. Okay, so if we look at Infosys in terms of its annual report, so therein you find that they have reported once again revenue recognition. And what do they say? They are saying companies' contracts with customers include contracts with multiple products and services. Yeah. Yeah. So similar type of CAM you can find. Then they are saying fixed price maintenance revenue is recognized. Okay. So similar sort of concern, or you can say similar sort of area they have considered. Now, if you look at another IT company, okay, let's try to understand as to what is the matter of CAM. Here again, what do you find? Revenue from fixed price contracts, including software development, integration contracts. Yeah, so wherein percentage completion method has been involved. So they have also considered similar matter to be a matter of CAM. So can you see this? That if we pick up any IT company, so this area seems to be common all across. Then if you pick up another mid-size company, okay, which is again an IT company. So let's try to understand as to what is the CAM. Now in terms of CAM, they are saying significant judgment required in estimating percentage of work completed in fixed price contracts. Here again, what do you find? It's exactly the same thing. Yeah, it's exactly the same thing. So that's why one should understand the importance of some of these areas and accordingly design their audit procedures in respect of some of these things which are there. Yeah. So with this, I would say I have broadly talked about some of the key areas that you face in respect of audit of the IT companies. Though Sanchit ji have already covered a lot of details, a lot of aspects around the IT sector in particular. So I just don't want to duplicate some of those aspects. So now I also understand that you may have some questions, doubts. So we can move over to your questions, doubts. Happy to have your questions now. Anil ji, I would request if there are any questions, doubts, then we can discuss that.
Thank you so much, sir, for such a wonderful deliberation. I request Gulshan ji and Madam, if you are having certain questions. So, because we are facing some glitch in the fetching of the questions, I request Madam, if you are having questions, to kindly raise the questions with the speakers.
Yeah, so I have one question. Is there any uniform audit procedures for the entire IT sector? And like, how is the valuation of intangible assets asserts with the tangible assets?
All right, so I'll take up this one. See, as far as the audit procedures are concerned, I won't say that there could be any uniform audit procedure which can cater to any particular sector or any particular company. See, audit, one will have to understand that audit is quite entity specific, and one should not really try to make this audit generic in nature. Though, definitely, in respect of each and every company, there are going to be a lot of audit procedure which are going to be common. For example, if I talk about understanding of the company, understanding of the industry, understanding of the process, if we talk about determination of materiality, if we talk about audit planning meeting, okay, if we talk about inquiries with the management, if we talk about, say, identification of the significant risk areas. Yeah, so these are definitely common audit procedures, which for each and every company you will have to perform. But now, depending on some of the outcome that you will get out of these understanding, your audit procedures are going to vary. Yeah, so definitely you can go and look at the audit procedures which are required to be applied to every company. But to say that in terms of their application, they can become common to each and every company will not be appropriate. Yeah, so we'll have to always tailor make that to each and every company.
Thank you. Now I have another question also. Like, as an IT auditor, like, what skills should an IT auditor possess to develop going forward?
I can take that up. It is important that as an auditor, we should possess IT certifications or qualifications like CISA, DISA certainly will help. A lot of the IT aspects are revolving around ITGCs. Everything else will remain very much similar to any other sector. However, whatever risk angles, fraud angles we have discussed are more specific to the IT environment in the ecosystem. So it is important to understand those nuances, be it around cybersecurity, gaining certain certifications in those, and understanding the SOC compliances, various like GDPR requirements and other regulation requirements. Those skill sets, whether you do a formal qualification or not, but understanding of this will certainly help in delivering the quality.
Understood. Thank you.
Do we have any more questions?
Not from my side. I think Gulshan might have some questions.
No, I don't have any specific questions. So if we don't have anything from audience, Nilji, maybe we can conclude.
Then I think if we are concluding this discussion, I would just like to thank everyone for your time, and I would also like to thank Anilji, Sanjeevji, Gulshan, Maninder. Thanks so much for staying around, and thanks for this.
Yep. Thanks everyone. Thanks for the participation and the questions, and hope this gave you some good knowledge about the sector. Yeah.
Thank
I
you.
think in real thanks to Sanchit and Achal to take out time and give so much knowledge about IT sector, so much, and to the last news. I think they have covered it in fairly detailed manner, and I'm sure the participants would have gained a lot of knowledge out of this. So, and they will be able to utilize this knowledge and apply this knowledge in their practical life while doing audit of IT companies. Great session. Thank you, Anilji, for arranging this. Thank you to Sanjeev sir. Maybe I think he would have joined if we would have continued till 6, but now we are concluding, so he may not be able to join. So thank you, everyone. We can probably conclude it here.
All right. Thanks. Thanks so much.
Thank you, everyone. Bye.
Right, Anilji. Thank you. Thank you, everyone.